Thanks. What's this? Oh, why is this not on here? Why is this on a half? Okay. Okay. Can't I reach the site? Doesn't make any fucking sense. One, two, three, four, five, six, seven, eight. One, two, three, four, five, six, seven. Something's wrong here. Where is Yeah. Oh, sorry about that. Loosen the Do you think we should get sandbags or no? All right, let's see if this works. invalid. That's invalid. This is the worst day of the year. Or, I don't know if it's worst day of the year, but fucking tax day. Okay. Thank you. Okay. What is this? I'll be on here in just a minute, guys. Uh, Text me a code. Uh, what the fuck do they want from me? What are they? Huh. My credit is much higher. Yay. Okay, is this? The changes were saved. Watch out for a roll here, guys. Okay. $25, 2025 household and tax. Oh, that is incorrect. Fucking part of this is why are these things not saving? Uh Check 1 2. Apologize for not having the news on this morning. I wasn't here in the office. I have today's tax day for me. And I had to go to my CPA. Hold on here, guys. Here I come. Give me a second to get settled in here. Oh.
Fed bids for 1-year bills total $2 billion. Lebanese President Orn says the only solution for the south is the redeployment of the army to the internationally recognised borders. According to CNN, Senator Tiller still plans to block Warsh-Fed nomination.
I feel like the bear from the Three Bears, who's been sitting in my bed. We closed the gap and left the gap behind. $6950. We still have more to go up. A little bit more. $6950. We have a little bit more up. We can go all the way up to here to R2. We have more up to go here. I don't know if we can hear this or not. I got to do a sound test. Sound check.
Trump tells the New York Post Iran talks could be happening over the next 2 days in Pakistan.
Sorry to play some music here in the background, guys. Hold on. Dude, how about that BLK this morning? That was pretty nice. Hang tight here, guys. I got a couple things I got to do in the background. I just got back to my office. My wife set up my office for me this morning, and it's not it ain't jiving for me. You did it the way that you like it?
Trump tells the New York Post we're more inclined to go to Pakistan for Iran talks.
I appreciate you setting it up for me. Today was tax day for me. It's not a good day for me. I didn't think I had to go to the CPAs this morning, but I did. We're going up here. We're gonna pin up on 6950 here in just a minute. We're going up. Continue to go up here. Sorry for being late this morning. I got unknown to me tax stuff. I got actually other stuff I got going on this morning too. We're having like flooding where I live. I gotta send my wife out to get sandbags today or something. I don't know exactly what's going on, but we should keep tracking higher. We're now trading 6943. We should go all the way up to 6950 straight from here. Like shoot up to it and then pin it. We have a 0-date pin on 6950.
We have put the article.
It's a little bit higher here.
For those interested.
Save. Okay. Accept. Okay, what does that mean? Remind me later. Can I play this now or no? What do you mean click to sample? How do I do this? My credit is higher, which is good. I don't like, these are weird days. I like paying taxes. I'm not an anti-tax guy at all. But when I pay when it comes to like tax day, I notice every little thing. I'm just like, oh my God, I don't have speed bumps on this street where I own a house. I'm like, I don't have this, I don't have that. It makes me like, I start wanting to make threats that I'm going to run for city council. It's not because I have city taxes, then I got property taxes, then I got federal taxes. And I'm a fairly high income earner, and I pay a pretty steep tax bill. It hurts. I'm not gonna lie. Okay, so where is this?
A bit more context. This New York Post article, shortly after speaking with a Post reporter on Tuesday about the outlook for future talks between the US and Iran, Trump called back with an update saying you should stay there, really, because something could be happening over the next 2 days, and we're more inclined to go there. It's more likely you know why, because the field marshal is doing a great job.
Field marshal? I missed that. BLK crushing it. And they traded 1069. They can now trade 1080-ish. Maybe 1082. Did C move up this morning? Yeah, C looks good too. JPM didn't do well. I didn't expect them to. They were more like GS. They actually had the down move this morning as well. BLK, though, crushing it. We went over them yesterday morning. They're up 8%, 7.19 since we talked about BLK yesterday. Almost 8% on BlackRock. Netflix mooning too. Near perfect trade as well. Here's Netflix. We charted this one yesterday for you. Had them coming down here for a bounce to the downside and going higher. They still haven't hit their upside target up here. This is Netflix. BLK, we charted this one for you. That's 2 in a row. This one went moonshot. We had 2 targets up here. The first one was 1048, and the second one is 108 something. This is on a 1-minute chart here, but you can see over here it was for 108. We're crushing that one too. Man, I'll tell you what, taxes, fuck me. Shouldn't be saying that, but and I got nailed in property taxes. Like, I think Michigan just came out as one of the worst property tax states in the country. And not only that, but my utilities here. Like, I got hammered from COVID, and the past couple of years, like, DTE and taxes have been stupid here. My one saving grace is that I haven't bought a house in Detroit in 5 years, maybe 3 years, 5 years. I bought some land in Michigan, but not houses. So I've escaped some of this stuff. I should like count myself lucky. What happened in Detroit is they changed the law here, where if you buy a home that's renovated or brought to code or whatever, you pay stupid taxes. If you bought your house like 3 or 5 years ago and you bought it and renovated it yourself, the tax code is fine-ish. It's still really high, but I don't know how some of these people do it. I don't know how people move to Detroit and buy a house that's renovated to market value. Some of these people are paying $15,000, $20,000, $30,000 a year in taxes right now on just a house. Trading up into R2, trading 692.71. Just a note that we are coming into 6950. We should like mess around here. We should like reject this, park on top, and then start to disperse here. Did I lose the stream? I'm on here for like 5 minutes. I didn't lose the stream. Hang tighter, guys. So I got to reset some stuff back here, make sure that I don't lose the stream. All right, give me a sec. I got a few things I got to do here, guys. I got some I got crap I got to do. I got to log into some accounts here and make sure that I'm done with tax. Today's the 14th. I only have one more day left. I just got to make sure that I'm crossing my T's, dotting my I's. We should consolidate in here. Let me just show you a few things here. This is our GEX exposure visualizer. What's kind of neat about this visualizer that we have on our website here is we have net gamma, 0 date gamma, 1 date, 2 date, 3 date, and then we even have an OPEX gamma button, which is kind of neat. We're going to look at net, and then we're going to look at 0 dates for today. Now, on net, we have a magnet here at 6950. If you are a member, you can check this stuff out on our website.
Expecting the US 52-week bill auction.
Note, too, that if we're able to get above at any point, even if we reject it, if we can get above it, just note that the next large bar is 7,000. On 0 date, the one thing I want to talk to you about 0 date is that this changes. So, as an example today, when we trade up into 6950, I'm assuming this is the next few moments we trade up into this. If we're able to hold 6950 and park here, this will change. Or no, not that it will change. It can change. So within 15, 20 minutes, half an hour, if calls are rolled higher, I'll let you know. But until then, we should pin this bar or reject this bar. Currently, we're trading. We're pinning right on it right now. We're pinning on it right. We're hitting it, smashing into it right now. And the next resistance above is 7,000. Just underneath ATH. Nope. God, tax day. Fuck me. Look. And I'm like a proponent of paying taxes. I think it's the waste that bothers me the most. Or I don't know. No, it's not just waste. The other thing that bothers me is I don't know. I got a bunch of mixed feelings. I'm like angry about it's some of it has to do with where I live. Paying for the bankruptcy in Detroit is brutal.
Bid to cover free spot 2-1, free spot 2-1, with the US selling 50 billion. Awarding
go right up here.
3% of bids at high.
This should be top right here. We're not going much lower. VIX remains elevated right now, which is kind of fascinating. VIX 9 days still at $16.81. We could fucking moon if we got a deal here. If we got a deal with Iran, we could moon, like go vertical. We're at R2 right now. R3 is 699.11. R4 and R5 is 705, 706, and 711. The market is primed for it. Like the expected moves for the day, a 2 sigma move is 712. A 1 sigma move still is only 69913. We have a wide range of, not wide range of outcomes, but oh shit, hold on here. That's pretty high there. 706, 699.13. I don't know what the fuck color that thing is. That's not green. It's like teal blue or something. Is that Josie? Josie, have a minute? Give me 1 second here, guys. I was just calling you.
According to the Wall Street Journal, seized Iran-linked ships will be taken to a holding area in Arabian Sea or Indian Ocean. We have posted the article from the Wall Street Journal on the feed for those interested. US Energy Secretary Wright says gasoline prices could be higher for a few more weeks. Currently speaking on Fox News. And that concludes remarks from US Energy Secretary Chris Wright.
I did my dad thing. Now parked on 6950. Do I have to keep saying that or no?
The S&P 500 extends gains to 1%.
I haven't seen him since I was a kid.
French finance ministry says current geopolitical crisis is leading to a significant increase in debt servicing costs, estimated at around 4 billion euros for 2026.
Those. Which is my ba, 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 ba.
According to News Nation, citing a White House official saying future direct talks are under discussion, but no date has been set. So just reiterating, according to News Nation, on the White House, official saying direct future talks with Iran are under discussion, but no date has been set yet. French Finance Ministry still targets deficit at 3% of GDP in 2029. So reminder at 12:05 p.m. Eastern Time, we're expecting comments from Bank of England's Governor Bailey, speaking in a fireside chat at Columbia University in New York. The event will be moderated by Bank of England's Taylor. We have put the live video on the feed for those interested.
Let's watch this here. We need to watch 12 o'clock close here. Like everybody's waiting for a drop here. I don't think we get it. I think we just park up here for a couple days. Not park up here, but float around this number right here. Watch out for a raid. Sorry, I'm just trying to get caught up here. One more thing. I got one more thing I got to do here. Watch out for sellers coming in on 12 p.m. Can you email me those documents? Over there.
So 5 minutes ago, we're expected to hear from Bank of England's Governor Bailey. Remember, the video is on the feed. So a reminder for Bank of England's Governor Bailey, text is to be released.
I have the speech up here. Watch out for a potential drop. We are on R2 right now, so we could park here. 5-minute trigger sits at 691.50, 30. Mark this one right here. I think it's that one right there. Watch that white line that I have right above. This is the one that you want to be watching right here. Should continue higher now. We'll take out this one right here and we'll continue up. Could end up just like messing around up here rather than going anywhere, like not going down or anything.
In the U.S., full employment. These objectives often require different tools, different time horizons.
Less than a minute ago now, we're expecting text from Bank of England's Governor Bailey. Also, we're expected to hear from Fed Scoresby speaking again.
I've got him up right now, by the way.
Speaking at the 7-4 World Economy 2026 event.
Where risks are more interconnected and less predictable. And how can policymakers preserve credibility and public trust while adapting to these evolving demands? We're very fortunate to have with us today one of the world's most distinguished leaders in this space to help us think through these issues. Andrew Bailey is the governor of the Bank of England and has been at the center of these debates for quite some time, leading one of the world's most important central banks through a period of extraordinary economic uncertainty. He has brought a thoughtful and pragmatic perspective to the question of how central banks can adapt while remaining anchored in their core mission. I had the pleasure of working with Andrew when our teams at Treasury and the Fed worked so closely with the Bank of England in the difficult years following the great financial crisis. He will be joined in a conversation by our own Alan Taylor, who is a professor here at SEPA and also serves as an external member of the Bank of England's Monetary Policy Committee. Alan's scholarship and experience in monetary policy make him uniquely well-positioned to guide this discussion, and we so appreciate his helping arrange for today's
Bailey's
discussion.
text has been released. We'll post it out for you
Before
in the feed
inviting
shortly.
our guests up to the stage, let me close by just noting that this is exactly the kind of conversation we aim to foster at IGP, bringing together policymakers to grapple with the most pressing economic and geopolitical challenges, and to do so in a nonpartisan forum. Now, a message for our students joining us today. I also want to encourage you to apply for our IGP Student Scholar Program. The IGP Student Scholars Program helps prepare Columbia students to understand and find solutions to today's global challenges. Students are selected for the program, and they benefit from the mentorship of our distinguished fellows and leading practitioners and scholars. They gain hands-on experience in policy-related research and analysis, and engage in dialogue with leaders and experts regarding the world's toughest problems. And with that, thank you all for being here, and please join me.
Bank of England's Governor Bailey warns financial
Governor
stability
Bailey
policy
to the
risks
stage for
becoming
some
pro-cyclical.
opening remarks.
UBS S&T saying the S&P 500 is lower by 80 BPS, climbing back above pre-conflict levels as optimism builds around potential U.S.-Iran agreement. UBS's Middle East resilient basket continues to grind lower while airlines bounce, helped by both easing geopolitical risk and renewed M&A optimism. Risk-on sentiment under the hood is evident, with rallies across LS volatility factor plus 3%, spec growth up 4.2%, AI risk software push higher.
In which the challenges move on so quickly that it would be reasonable to think that the events in the Gulf.
Bank of England's Governor Bailey also mentioned that financial stability is more exposed to political and private pressure.
I think it was last Friday, I can't remember, you wake up to find that Anthropic may have found a way to crack the whole cyber risk world open. And you think, what is...
Not sure if we're consolidating or dispersing yet.
But look, thank you for inviting me to speak today.
Could just park, I think we could just park up here all day long, just like sit here. There is another target higher for 7,000 if we can get an agreement today. I don't know if we get the agreement today.
And where it's most challenged. I'm going to use the term CBI for central bank independence from now onwards just to sort of keep things flowing reasonably well. But there will be a strong monetary policy element to what I'm saying, because you can't view the two sides of central banking, monetary policy and financial stability, apart in this respect. So as Jack suggested, modern central bank independence, modern CBI emerged really out of the high inflation era of the 1970s. Now, it didn't originate then, and it has a much longer history than that. But in its modern form, you can really say that the 1970s was the experience that prompted quite a lot of change. And let me use the Bank of England very briefly to illustrate some of the antecedents of that. And I'm going to start by going back to 1802. It was Henry Thornton, who was associated with the Bank of England, wrote a work called An Inquiry into the Nature and Effects of the Paper Credit of Great Britain.
There's other targets up here. There's 695.29, 697.29.
A few brief quotes from that work. He said, "The Bank of England is quite independent of the executive government. Reconciling this with the extensive lending of the Bank of England to the government." So
another target right there.
He commented that
that's the hold, though. We got to put in a new high off this high over here.
That of mutual convenience.
Can't take the trade until we get above this high.
He also said, "The preference is no symptom of a want of independence of its directors. The government of Great Britain is under little or no temptation either to dictate to the Bank of England or to lean upon it in any way which is inconvenient or dangerous to the bank itself. And finally, to suffer either the solicitation of merchants or the wishes of government to determine the measure of the bank issue," think about that as the money supply, "is unquestionably to adopt a very false principle of conduct." That seems quite definitive, really, but let me draw 2 points out from that. What he was illustrating is an older notion.
So we have posted up Bank of England Bailey's speech on the feed for you to read through.
Called an alignment of interests and incentives between government, private.
Also a reminder, Fed's Cosby should be speaking again.
didn't have within it anything more formal in terms of independence. That's the first point. The second point is, though, that it did require an anchor, and that anchor was the value of money. And again, this is the last point of ancient history I'll use, but let me go back to John Locke, writing in the 17th century in Britain. And he emphasized the importance of, quotes, money being constantly the same, and by its interest giving the same sort of product through the whole country. Money is the measure of commerce and the rate of everything, and therefore ought to be kept as steady and invariable as may be. Now, taking all that experience on board,
I have to get above this one right here.
20th century, and particularly after the 1970s, the idea of CBI being assured.
So just watch this with me closely. We have to see this pop up here, and then we can take the back test on it.
The anchoring on the value of money was
Don't institute a trade here. We're kind of locked in with consolidation right now.
First, for many countries, the UK included, CBI evolved to a system of formal statutory powers established in legislation. Now, I recognise, of course, that there are countries that got there sooner, much earlier in the 20th century, including, of course, the US. Second, CBI remained anchored on the stability of the real value of money achieved through monetary policy. Third, there are differences between countries in terms of whether monetary policy independence relates to setting the objective, the target, or operating to achieve the two of them. Broadly speaking, few...
Do not take this trade unless we pop up here.
On the other hand, all...
If they roll this, it could get nasty down below.
The picture is, though, mixed when it comes to setting the target.
VIX is beginning to rise, VIX 9-day. Be careful of a roll here.
In that we at the Bank of England don't set the objective all the time.
VIX 9-day now trading 17.06. Watch out for a quick flush.
But de facto, and in some cases, as in our case in legislation, modern central banks typically have two objectives: monetary and financial stability. The substance of what I'm going to talk about today is around how these two fit together in theory and practice. Now, given what happened in the 1970s, it's no surprise that modern CBI was based around monetary policy.
Watch out for a roll here.
And a core element of the case for CBI in respect of monetary policy is the so-called time consistency argument. Ex ante, a government wants low inflation and stable growth. But during the policy process and ex post, it may be tempted to create a little extra inflation to reduce unemployment or ease debt burdens. But if people expect this to happen, there is no lasting benefit in terms of lower unemployment, but there is higher inflation, so you get the worst of both worlds. So delegating monetary policy to an independent central bank is a commitment device to reduce the incentive to renege on the promise of low inflation. And it could thereby anchor inflation expectations, what people think inflation will be in the future. So, to take the UK case, an inflation target set by the government combined with operational central bank independence to meet that target is designed to ensure that the central bank's incentives are aligned with public interest in price stability. Now, in principle at least, the argument for financial stability works in the same way. Governments want a stable financial system, but can be tempted to lower standards.
Remember that. So this is Bailey. He is a hawk.
To an independent central bank
Tends to be a hawk.
Where I think financial stability differs from monetary policy is that the act of delegation is a less robust contract, reflecting the completeness of the remit and the measurability of the objective, and also because of the different direct impact of financial stability on the long-run growth of the economy, a point I'll come back to. This opens financial stability up to differences in the way conflicts of interest can arise. Financial stability policies interact with private interests in a variety of ways. So a difference is between monetary policy operating through an aggregate tool and financial stability through many levers directly affecting private interests in many ways.
Shipping data says 9 commercial vessels have crossed critical motions yesterday,
each of
including
these
2 oil
individual
tankers under
levers may not
sanctions.
be essential for the financial stability objective, but they are essential when taken as a set. For financial stability, there is more scope for conflict between the public good interest and private interests. This can put governments in the position of having to choose which side to take. To use Thornton's words, between the salutations of merchants and the central bank. The current debate on levels of bank capital and the Basel standard is a good illustration of this. So it is striking that the literature has given little attention to the concept of CBI in respect to financial stability. In practice, the issue goes further, I would argue, and two features of the commentary stand out for me. The first is a tendency to describe other activities of central banks as tangential to monetary policy, and this set would include financial stability. The second feature...
We still have stuff to take out up here, you can see it.
Stability can require the central bank to compromise on the objective of monetary stability, particularly when the financial system appears to be under threat of instability. So in other words, we move on from the tangential towards an actual conflict of interest. So what then are the consequences of the system we have today? Well, let me pick out two. The first consequence is that to the extent there is tension between the objectives of monetary and financial stability, it can be pro-cyclical. In other words, the relative priority given to financial stability
with Bank of England's
depend on the
Bailey, he will
conditions
also
at the
be
time.
joined by Bank of England's Taylor as well.
The period before the global financial crisis saw a relative neglect of financial stability, I would argue. The crisis necessarily led to a surge of interest in and emphasis on financial stability. But this sort of pro-cyclicality is not, I would argue, the best form of organisation. We really need it to be more steady over time in terms of the intensity of focus. And this in itself is an argument for robust central bank independence for financial stability. The second consequence is that the nature and definition of CBI differs between monetary and financial stability. This is very important, and I would argue, and perhaps surprisingly so, an under-discussed issue. Because the two notions of CBI in the context of monetary and financial stability do differ in important ways. Why is this the case? Monetary stability is easier to define and certainly easier to capture in a single numerical target. In the case of the UK system, it's an inflation target. Now, this does not inevitably make the task at hand easier for monetary policy, but it certainly creates a focus. I think it also means that the structure, system and governance of monetary policy is more straightforward to capture in legislation, though again, not in a way that removes the judgment, the need for judgment to be exercised by the policymaker. So what is it about financial stability that makes it less straightforward? Well, I think a number of elements are relevant here. First of all, financial stability is a large canvas, and there are many elements to it. This means that not only is it impossible to capture in a single numerical target, but it is defined as the absence of something that operates dynamically and across many dimensions, and thereby engaging many private interests. It's also the case that determining the line between acceptable risk and the potential for instability is difficult to ground. Success, in the word of financial stability,
that's high enough right there.
On delivering on inflation target.
Second, it's important to consider how monetary and financial stability affect the real side of economies. The canonical view of the impact of monetary policy on the long-run growth of economies is that, if anything, it does so only indirectly by preserving price stability and thereby reducing uncertainty so that businesses and households can better plan for the future. An older argument with respect to monetary policy is based on the so-called neutrality of money, such that long-run changes in the monetary supply affect only nominal variables, prices, wages, exchange rates. They don't affect real variables, real GDP, employment, investment, consumption. This idea really goes back to the classical economists who drew the distinction between the real and nominal spheres of the economy and treated money as a veil over an underlying barter system of exchange. It followed that the monetary policy was assumed not to affect the long-run trend growth rate of economies. Well, this view has been modified a lot in more recent times.
If shock take inflation
While
off
holding
target,
to the view that there is no
but not
long-run
persistently,
trade-off between
we should be
inflation and
measured.
output.
We
In the
should be
short
measured
run,
in response.
modern economists tend to treat money as
So
non-neutral
again, if the shock
because
takes
sticky
inflation
prices
off
and
target,
wages means
but not
that changes in
persistently,
money
we
and
should be
monetary
measured
policy
in our
can
response.
have a temporary effect on output and employment. And added to this, there is now considerable support for the credit channel effect of monetary policy, working through the supply and cost of credit, not just risk-free assets.
Going to start grinding higher here in just a moment.
Financial stability, though, has a more immediate and direct effect on the level and growth of real output, employment and investment. A stable banking system directly supports economic growth, while an unstable one will tend to disrupt lending and have negative consequences for growth. In this sense, there is no long-run trade-off between financial stability and growth either. Now, this distinction between monetary and financial stability matters in at least two other important respects when we think about central bank independence. First, it follows from the point on growth that financial stability will have clearer distributional effects within the economy and society broadly. This point is important when thinking about CBI, and it can be uncomfortable for central banks because we generally don't wish to be involved in distributional issues. Second, and closely linked to the distributional point, financial stability will interact with many more areas of public policy. Many other parts of government will state an interest as a consequence because they will consider themselves to be directly affected by the outcomes of decisions taken by central banks in respect to financial stability. In my experience, there are many examples of this mechanism at work. And if I go back to the point I mentioned at the start about Anthropic, you see just this point at work. That is a whole different area of public policy, but we can't ignore it. The same goes for private interests. They are more directly engaged by issues of financial stability. Now, this might seem like a very strange thing for me to say, because surely people have views on interest rates, and of course they do. But in keeping with the more background property of monetary policy, and critical though that is, the private interests are not as sharply defined typically, and certainly in my experience. So again, the consequence of this difference is that financial stability in its broader sense tends to induce a lot more direct lobbying by affected private interests. It's therefore much more talked about in a specific sense, whereas monetary policy is very widely talked about in a more general sense. And it means that more interest groups feel that they should have a direct say in financial stability decisions. Moreover, I would draw a further distinction within financial stability between macroprudential and microprudential, in other words, system-wide and firm-specific regulation. The issue is much more acute for micro-regulation. Because if the activity involves directly regulating individual firms, and the objective of that regulation is to get firms to do or not do things that had not occurred to them based on their private interest, it's pretty easy to see that the challenge to independence will be more direct and more forceful. And in my experience, that's exactly what we see. Another element relates to an important difference in the process of conducting financial stability.
Target is 69529.
Financial stability policy making often involves setting rules, something which does not arise in the same way for monetary policy, where the term rules has a different meaning. But this rule-setting process can place financial stability work more closely adjacent to the work of governments and parliaments because as financial stability-focused rules change, it will sometimes be necessary for aspects of legislation to change at the same time. Now, my point here is this doesn't have to be inevitably problematic, but it creates two phenomena, I would argue. The first is that the rulemaking process drives a regular need for intensive and detailed coordination between central banks' financial stability work and government policy making. The second is that where the boundary is drawn between central bank financial stability rulemaking and what is done by governments and parliaments varies widely across jurisdictions and through time. So the conclusion here is that the meaning and substance of CBI is different between monetary policy and financial stability. And it does interest me, this point is not often made quite so directly. What are the consequences then of this distinction? I can think of times when there has been pressure to avoid compromising monetary policy by placing emphasis on the financial stability sibling. It can also cause approaches towards financial stability to be pro-cyclical, in the sense of only wanting or having to deal with it when times are difficult. There is also a noticeable pro-cyclical nature to the private interests and the lobbying. Thus, as episodes of financial stability recede into the past, the lobbying grows. And this can be challenging because an important part of financial stability policy is counter-cyclical. In other words, use the better times to build up the defences. And I think the best statement of this condition came from the economist Hyman Minsky. So just to quote him, "As a previous financial crisis recedes in time, it is quite natural for central bankers, government officials, bankers, businessmen, and even economists to believe that a new era has arrived. Cassandra-like warnings that nothing basic has changed, that there is a financial breaking point that will lead to a deep depression, are naturally ignored in these circumstances." Now, I should say I've used this quote from Minsky before. After I did so on the previous occasion, someone came up to me and said politely, "Don't you think it's time to retire Minsky?" I put that on the record as illustrating perfectly the point that Minsky was talking about. But that leaves the question what to do about all of this. And more particularly, we're left with a situation where we have two rather different forms of CBI, or at least sufficiently different, I think, to be an issue. In terms of the responses, let me rule out what I call either end of this possible range. I don't think ignoring it is acceptable, nor do I think we can try to override the underlying drivers and make each form the same. So that leaves two options. One is a form of status quo. It is to accept that central banks have two objectives, monetary and financial stability, and there are versions of legislative independence attached to both, which can differ, and then to say, let's limit our ambition to being more transparent in setting out the differences. That would be a step forward. But I'm now going to argue that I think we should be more ambitious. By arguing for ambition, my view is that we should start by identifying what ties the two objectives together rather than what makes them different. Is there a single unifying definition of the objective of central banks which, while not ignoring the difference,
should see squeezing here in just a few moments. We should go vertical.
Is it possible to use this common ground to create a more useful and resilient objective? The simple answer to whether there is a single and unifying definition of an objective is yes. And I think it's actually staring us in the face because it actually goes back to John Locke and the value of money. One way I've come to this conclusion is one of the most enjoyable things about being in the Bank of England. I've got two colleagues from the Monetary Policy Committee here. They may or may not agree with me. I think they do, actually. But we go around the country talking to businesses, but we also try to go and visit schools. And I usually talk to economics and business students at our equivalent of high schools.
Eastby's McAuliffe says it's not impossible the Fed and ECB take different paths.
Oh, dude, seriously, stop talking. We're trying to make money.
Years of doing this, I've concluded that the best way...
This fucking guy, it's like fucking constantly fucking doom.
...in the money business. Usually gets a laugh from the students. Well, sometimes. And then I go on to describe what I mean by it.
You can't hear that, can you?
Mean in terms of
he just constantly fucking talks about fucking all bad shit all day long, never ends.
In some ways, actually, the easier part is monetary policy because the objective of price stability is the stability of the real value of money. Defining financial stability is the harder piece. But can we anchor financial stability more in the stability of the nominal value of money? I think it has a potential as a definition. The key element of financial stability here is the banking system. Most of the stock of money...
He's like a straight perma-bear. He's like never ending.
Fractional reserve banking type...
It's like every day World War III.
And the key here is the assured value of the stock of bank deposits. The stock of commercial bank money, also known as inside...
Should see a pullback within this half hour here, but still going up.
The core functions of central banks. The system also
like that.
depends on the assured nominal value of this inside money. In other words, we all trust that a dollar or a pound in my account is worth a dollar or pound in your account when we make payments to each other. There is, of course, an important anchor to underpin the assured nominal value, namely the ability to convert inside money into central bank money, outside money. Now, as Milton Friedman and Anna Schwartz documented, this assured value of inside money was not always true in the history of American banking, where there was an absence of outside money and the system was unstable, if you go back to the 19th century. And beyond providing outside money, as a central bank, we regulate banks in good part because we want to ensure trust in money. And that means assured nominal value. To give you an illustration of that, I think that concept of assured nominal value helps to explain why it tends to be very hard in practice not to assure the nominal value of uninsured bank deposits. Why that is a recurrent issue every time we have a bank crisis. Coming up to today, and another very topical issue of the moment, when I look at an innovation such as stablecoins, my reaction is that if you want to be in the payments business in scale, and payments are a key function of money, you need to meet the test of money and trust in it, which is assured nominal value. Now, that's another talk, so I'm not going to give that today, other than to briefly say that I think for some stablecoins, some more work is needed on this front, and I think more work is needed on the standards. But there is a big question outstanding in my attempt to capture more thoroughly.
I'm watching this VIX here. If we get a deal with Iran, you know, VIX is at 17.15. We could go fucking vertical.
This, to be honest, is a genuinely open question. It may be that nominally stable money is necessary.
I'm actually surprised that VIX is holding here.
Consistently to deliver essential financial services to households and businesses.
We're set up for a blow-off and a major squeeze.
Nevertheless, nominal value stability is a good step forwards. But let me also briefly set out why I don't think the issue is as large as it may seem. Let me start by recognizing an important point. Since the financial crisis, the non-bank financial system has expanded in size relative to the bank system. If you look today at the agenda of the Global Financial Stability Board, which I also chair, you cannot help notice that it has a very large component of non-bank items, indeed larger than the agenda of bank items. Now, on the face of it, that looks like a problem for my argument that central bank financial stability objectives can be captured under the value of money. I'm not sure, however, that's necessarily the case.
Fitzgoolsby says, so far,
Yes, the non-bank
consumers
sector
just
has
keep
expanded.
chugging along.
It reinforces the separation between banks, whose liabilities are money with assured value, and non-banks, whose liabilities are investment type.
I wonder if this guy listens to the show, because I feel like when I say something bad about him, he gets upset.
More risk that way. They can earn more
I'm serious. Like just now, he sounded like he was upset. I'm not mad at him.
The non-bank system relies on the bank system for liquidity, and in turn, the banks are underpinned by central bank liquidity, outside money. The bank and non-bank systems are highly interconnected, but in somewhat different ways to those.
So I keep an eye on these pullbacks every time I come into a half an hour.
CNN said that the Navy is not escorting any ships through the strait, but it's been communicated to merchant vessels that it is safe to pass.
So when central
encouraging
banks
them
look at
and
We haven't been under the 1 minute all day, so if you got to be underneath the 1 minute for us to like see this white line right here.
those are the vessels, merchant vessels that are not.
We kind of need to be not kind of. We need to be underneath the white line.
Said the US is not
Make a second low.
blockade of the strait,
potential for
only
So it's uppies until then.
exiting Iranian ports along the entire Iranian coastline. And from
Another
the CNN
interesting question
reporter
here is whether
citing
the
the US
money
official,
anchor of a
the
financial
US also
stability
sent
definition
destroyers
should
through the
factor
Strait
in
of
more
Hormuz last
explicitly the
weekend
velocity of
to
as-
demonstrate that
of
there
as well
is
as
a
the
safe
value of
path
money.
with the waterway.
That's right. The U.S. is calling bluffs right now.
In terms of the simple traditional quantity theory of money,
We double dog dare you to attack.
where money, M is money supply, V is the velocity of money, P is the price level, and Y is real output. Now, the typical simplifying assumption in that world is that V and Y are broad.
Watch this yellow line. I'll keep moving it in case we start to break underneath it.
But what happens when that's not the case? Let me
There's another one right here.
dash for cash at the outset of COVID as a very good illustrative case study of this. Happened in my first week as governor, which allows me for many reasons to say that Mark Carney has brilliant timing and I have terrible timing. There was a precipitous fall in real output as economies shut down. At that time, the rate of inflation was generally very low, and there was a so-called dash for cash. Firms, for instance, drew down credit lines with banks out of fear of access as economies entered such a difficult state. They hoarded money.
Note here, right now, what we're doing is we're building out a base on 90 and 80.
Let's assume for a moment that central banks had not stepped in to provide money via quantitative easing. There was a risk of a major financial stability problem, as the demand for liquidity was not met. And that would have further rebounded onto the state of the economy and onto monetary
We're
policy.
trying to roll it again here.
Now, I'm not, for a moment, I have to get this on the record, I'm afraid, pretending that this provides an answer to whether QE should have been short-term or more prolonged at that time. That's another question not for today. What I do say is that this illustrates how there was a strong money anchor to the financial stability question. A core element of financial stability is that financial institutions which hold money should be trusted, and thus that the value of money can be trusted. Let me illustrate that very briefly with a contemporary issue. There is more concern now, following recent events, about the resilience of so-called private credit. This is a non-bank activity that has grown rapidly since the financial crisis. The point is sometimes made that private credit lending to corporates outside the banking system has grown rapidly because the banks have been over-regulated and therefore are not lending. I think this misses the important point.
Keep an eye on these two lines right here. So pulling back on a half an hour here. This is not holding at the moment, but if we can't put in these two, you want to see one and then two, we can start taking some off, but otherwise just stay vigilant to go higher here.
The job of financial stability is not to stop any of this, it's to ensure that the distinction is robust. And that is what we have to challenge, test, and design into the system. So I want to leave open the question, can we usefully capture the objectives of central banks' monetary and financial stability under a single description of the value of money? It needs to have its tires kicked. But a key part of financial stability is maintaining the integrity of money. That said, frictions and imperfections in the financial system can lead to suboptimal outcomes in many states of the world, and notably in bad states when amplification mechanisms can kick in.
There's a little bit of news here.
Another type of public policy, there is a role for financial stability.
A U.S. official stating that the Navy is not escorting any ships through the strait, but has been communicating to merchant vessels that have not entered or exited Iranian port that it is safe to pass and encouraging them to do so. The U.S. is not enforcing a full strait blockade, only targeting ships entering, exiting Iranian ports along Iran's coastline. U.S. destroyers, 2 of them, recently transited the strait on the weekend to demonstrate safe passage. You just see this here. We're just hammering out this 90 here.
And I would argue not robust enough. Thank you.
Okay, thank you. Thank you, Andrew, and thank you, Jack, for the introductions as well. I'm Alan Taylor. I'm an economist and also a professor here at CEPA, and it's a great honor and a pleasure to welcome Andrew here. And what you may not know is that Andrew's career began as an academic economist, an economic historian, in fact. Yeah. So there's a great deal of affinity here, and your speech alluded to sort of many historical events and influential authors.
5-minute triggers coming up on R2 as well.
Get your questions ready. I'm going to take them in bunches of 3, and we'll do that in a minute. I just wanted to start off with the prerogative of asking the first question with some reflections.
We should, of course, say that, Alan, you're also a member of the Bank of England Monetary Policy Committee, and you have got the entire economic history components. Also
note that we have a 4-hour bar forming here shortly. It's 12:39. Around 1:30 begins to form. Could see
I want to go back to something
into that 4-hour candle, just a back test on the prior 4-hour.
What happens during a crisis, and how when people use the words, the central bank is the only game in town, that makes him want to get out of town. And that really pertains to the fact that, you know, the central bank controls high-powered money. And in a crisis like a dash for cash, that's what counts, and that's the ultimate defining concept of stable value that you alluded to. So great speech with the symbiosis between inside and outside money, or high-powered money. But it also made me reflect on another one of our predecessors, Paul Tucker's questions about unelected power, about where should you draw the circle around what the central bank does in terms of its independence and its mandates. And I think I'm channeling Paul here in that the clean concept is just monetary policy and the inflation target, and getting too many extraneous objectives can just muddy things up. And sort of the old model of the 1990s was built around the narrow definition, but then we had a comeuppance, a learning experience of the financial crisis, and financial stability has been bolted on. So you really went into the details of why financial stability is more complicated. Many levers, many targets, harder to measure. And so at the end of the day, is it just really sort of an inevitability, though, that you have to bring it in? And I think maybe Paul's view would be to say, well, it's because you're the lender of last resort. You have the high-powered money. If you're going to have the responsibility to do this in a crisis anyway, then you should have the power ex ante to be regulating this, maybe because you have that power, but also maybe you have the technocratic capacity. So is it the best monitoring as well as the lender of last resort power that really forces us into this position of having to try and figure out what this financial stability piece of the central bank independence and mandate means?
Well, I mean, it's a really good point. I should sort of say that Paul, Mervyn, and I worked together for many years on these issues, so there's a lot of common ground in our views, probably. I mean, the thing that I would draw out from that is, first of all, is the pro-cyclical point I made. I think the financial crisis is the best illustration of this, and Mervyn's comment is the best. You know, when you're in a crisis as a central bank, you just can't avoid it. Because, as you said, to pick up Paul's point, you're the lender of last resort. Ultimately, it comes back to the central bank. And that leads to the view, I think, and I think where we are now today, is because of the pro-cyclicality, you cannot afford to be what I call out of financial stability at the other in the other times when you're not in the crisis. I don't think that's a sensible policy, sensible place to be, because you are then storing up problems, which you eventually have to come in and deal with. And the cost of dealing with those, as we all saw in the financial crisis.
Let me read this to you. I'm reading something here in the background.
Heads up, FedSpar should speak in about 3 minutes. FedSpar speaking on rural economic development and the Strengthening America's Economy through Rural Investment Forum. Text is expected, but no Q&A.
As Pravorsky noted, the S&P declared victory yesterday, having fully retraced the post-Feb 27th shakeout. So too is the VIX. That's not true. VIX is running pretty high right now, or at least VIX 9-day is, which is actually good. It says we can squeeze still. If we blow off the rest of that VIX on an announcement of the opening of the Strait of Hormuz, he goes on to say, while there's an open risk the ceasefire falls apart, Goldman Sachs head of hedge fund coverage, Tony P, notes that this conflict is tracking to be another occurrence of stocks finding a bottom before the trumpet sounds. The local low was on March 30th, a day that warned of devastating consequences. I said a few weeks back that the market is certainly smarter than I am. To borrow a line from a very senior money manager, the market is usually right. Local technicals have held sway and remained supportive, so the market is awaiting some kind of, not a ceasefire, but an end to hostilities with Iran. There's also a bunch of news stories coming out, Iran making pleas for its economy to be repaired, the devastation that's taking place in Iran right now to its economy. The rally yesterday kept the CTA demand switchly firmly in the on position. Now, this was at 12:45 this afternoon. While options market makers are still long of gamma, for the rest of the trading community, I presume that higher prices will bring more buying and vice versa, while noting that systematic activity has an asymmetry to the upside. We should also note here that the U.S. retail investor stayed in the saddle while the intensity of the single stock demand ebbed. Underlying inflows to mutual funds and ETFs were healthy.
In that event, so you have FedSpar, Feds Collins, and FedSparkin speaking DC.
Remember, too, that tomorrow is VIXpiration. Through OPEX 417 declares short VIX vol bets and remove positive gamma. This should allow for markets to have more volatility. Looking at the gamma structure, it's positive. It's a positive gamma regime with positive gamma from 6,600 through 7,000. We have targets above of 6,975 and 7,000. There's a bunch of SPY targets higher. 69529, 69729, roughly in there. There are a ton of VIX puts. There are a ton of VIX puts expiring 800,000 from 20 down through 17. Roughly speaking, the relationship between VIX down to SPX has been greater or less than 50 BPS, meaning 1 point of VIX drop equals 50 BPS of SPX rally. And note here that VIX is holding on still. It's at, I'm looking at VIX 9-day right now. Let me take a look at VIX 30-day really quick. VIX at 1895 right now. So if we can get like a VIX collapse at some point, any kind of news.
Even
if we, it's kind of it's not shocking, but we could go up 1% on just VIX collapse. Roughly speaking, the relationship between VIX down to SPX up has been about 50 BPS, meaning 1 point VIX drop equals 50 BPS SPX rally. VIX going from 21 to 22 on Monday to 18s today is probably good for 1% of SPX influence, and we think the VIX is only going to be pressured lower today. And when combined with all of that positive SPX gamma, stock should be able to be stable today. Looks very stable right now. Tomorrow at 9:30 Eastern Standard Time, April VIX contracts expire, and we have a bit less confidence in market stability. But there's a caveat with that. Hang tight here.
From the article then, Dow and Exxon are among companies boosting price of plastics as the sector grapples with supply shocks from the US-Israeli war in Iran. So it will raise prices for North American buyers of polyethylene resins, common plastics found in packaging, films, and containers, through at least till May, according to document.
Still holding just fine here. Just got to break above this yellow bar right here. So you take out this last little bit right here. Smash through this right here, right now. There you go. That's perfect.
So
should continue to grind higher.
US will allow temporary waiver of sanctions on Iranian oil on the sea to expire this week. So again, two US officials say US will allow temporary waiver of sanctions on Iranian oil on the sea to expire this week. Further detail into this, then, the Trump administration would allow a 30-day waiver of sanctions on Iranian oil at sea to expire later this week, according to two administration officials, as the US imposes a blockade on shipments from Iranian ports. The waiver, which the Treasury Department issued March 20th, allowed some 140 million barrels of oil to reach global markets and helped relieve pressure on energy supply during the war in Iran. So the specific date, the waiver is set to expire April 19th. Further to the reasoning as to why this is happening, so it comes after lawmakers from both political parties criticized the administration for temporarily relaxing sanctions on Tehran and Moscow, while the US and Israel are at war with Iran and as Moscow continues its war in Ukraine.
Pasquario notes that he spent much of the past 6 weeks trying to work out why S&P was so resilient. In that search, a few things came up again and again. The market never lost confidence in the underlying durability of the economy. 2, in turn, earnings expectations trended higher. 3, again, household investors never spit the bit. Ex post, I'll add one more to that list with credit to Ben Snyder. The AI tailwinds remained in place. Don't take my word for it. Consider price action in our AI leaders basket. The ticker symbol is GSTMT AIP. Then consider that 40% of S&P earnings growth this year should be driven by the AI investment cycle. So even if we get like a roll, let's say we get a flush in the middle of the day here, the market should stay higher, and it's primed here for a squeeze into the bell. VIX 9-day trading 1776. If we don't get that, if we don't get better news today, we should still stay higher, at least into the bell today. Then consider 40% of S&P earnings growth this year should be driven by the AI investment cycle. Note, too, that Pasquario says that we can unwind tomorrow morning on the open on VIX expiration. You guys all know what happens on VIX day. We tend to blast down for 2/3 of the day and then recover like nothing ever happened the following day. Subject to your interpretation, the forward PE multiple of S&P on December 31st was 22 times. On February 7th, it was 21 times. At the local lows, it was 19 times. Pasquario goes on to say, so what? Well, I don't find risk-reward to be particularly attractive, principally because I worry that latent inflation will be an irritant for a long time. The bulls can argue that the market was sober and responsive to the damage that has taken place. Now, if you're still worried that folks are too complacent on those open risks, I'd keep a line in the water via deferred Brent crude oil, which is still trading around where it was pre-ceasefire. Again, if it's oil that you're worried about, and attend to that discrete risk in the liquid format. A number of things changed in the past 6 weeks, yet one investor commitment that has impressively held up is Asian equities. Also note, too, here that Pasquario says that on any of these highs today or yesterday, you can begin to hedge for a print in the coming week on this VIX expiration. A number of things changed in the past weeks, yet one area of investor commitment that has impressively held up as in Asian equities. Here I'll note that Taiwan blasted to fresh highs last night, while Japan and Korea are one good night away from claiming the same. The attendant question is whether confidence has been shaken in European equities. While too early to tell, my instinct is that it has. There was talk yesterday of the ECB having to become more hawkish. You heard more dovish speak just a few moments ago on. Keep an eye on these two yellow lines right here. And this start right here. Let's move this over. Just stalling out right now. Watch out for a midday flush. He goes on to say, I'm very curious to see how gold behaves over the next few months. As argued before, the yellow metal is whatever you wish it to be. For me, it's an asset with no intrinsic value and no yield, and therefore principally driven by narrative and flows. This looks like we might get a flush here into 2:33 p.m. In that context, the biggest trend of the past 4 years has been significant accumulation by central banks. Based on recent headlines from the likes of Poland, that trend has been somewhat disrupted. Throwing everything into the blender, here's my market view. The primary bull trend remains intact. Yet the core growth and inflation trade has worsened and growth should slow in the second half. I think this all reaffirms my recent point on the tactics of near-term execution. Build longs on sharp pullbacks and add protection on days like today. Note that I want to note something to you here that I checked last night. Velocity on higher frames, and we're moving into a phase of the market where we're not losing enough velocity on these bigger down moves. Tony is talking about the second half of the year being an issue. I think that we're going to see more large declines like we did more frequently last year or two of bubble. So where we saw one last spring, we saw one this spring. You may begin to see them more frequently. Big blow-offs of velo to stay long the market, to still go, believe it or not, vertical. We'll talk more about this. I need to do some more investigating in this, but it's starting to look more and more like 98, 99 in terms of velocity, where we'll get big, huge moves down. We're talking like every 3 months or so, violent moves down with even violenter moves higher. Still parked on the island. Want to see if this holds up right now. We did blast through the first set of yellow lines right here. If we make a second new low, we will get a nice plunge or a nice sweep into the middle or end of the day. Remember that VIX has not been murdered yet. VIX still maintained, VIX 9-day at least maintaining 1729. If we're going to kill the VIX, or at least like VIX 9-day, into the bell here today, it built from a low on December 24th of $9. February 27th was the VIX low for when we invaded, or I guess when the Iran-U.S. war started. The VIX low was like 26th. It was right where we are right now. Remember, the market should remain supportive, and we should kill VIX into the close today. Let's keep moving that over. Watch closely to see if we reject to start flushing into the middle of the day. We're not there yet, but want to see if this rejects up here and makes a new low. I was reading some stories last night about does the B of E turn hawkish? China's likely going to have to turn extremely dovish. Besant today calling for the U.S. to remain dovish, or neutral at least. Where's the half-hour trigger? It's coming up. One minute, 5 minute trigger flattening right now. Closing target is 697.31, but I don't think we can get there until the bell. I'm watching, it's like right, if you're watching VIX 9-day, you're seeing the half an hour and hourly trigger come down. You want to see more supply at 1809 to go lower into the bell. VIX hanging on a cliff right now. It's a long way down. There's a sweep here at 91. There's one at 90 down here.
Fox Business reports that the Treasury warns banks in Oman, China, and Hong Kong, as well as the UAE, about handling Iranian money.
That one's gone.
Gold rises nearly 2% on the day now.
That was the end of Bailey's remarks. Jesus Christ, $110,000 fucking dollars. I shouldn't feel so bad. My buddy just said he paid $110,000 last year, and he's gonna pay $190,000 this year. I'm nowhere near him. Not nowhere near him, but I'm up there. I'm in like the 60s. I'm pretty fucking furious about it. Your accountant closes his eyes. My accountant fucking had a bourbon with me. You know when you get invited to, you know when your accountant and your attorney fucking pours you a bottle or a glass of bourbon and invites you to holiday parties that you're paying out the fucking nose. Hold on here. When my accountant poured me bourbon for lunch today. That's when I knew it was bad today. I was like, oh, fuck. It's too early for a drink. I'm like, what's the damage? Right back in it. I don't think we lose this. If we do lose this, it's going to be like a quick flush. I don't think we are, though. And what's giving me that reasoning is I have one more target here and here, like 90s, and then 690, 92. But I think this holds into the bell. I think we just grind. Maybe we get a plunge, but it should recover, and we should go higher into this bell. There's real risk here of squeeze. It might take into the absolutely fucking last minute of the bell. But if we can murder the VIX into the close here, there's still juice to go down. There can be an argument made that this is as low as it's going to go, due to the fact that we're right at the Iran-U.S. war level for VIX, but we're not heading into volatility season. You have to reset the VIX. If the market thinks that we're done for right now, doesn't mean we can't have like big downstrike or downstrokes in the market, but theoretically, if you're gonna, if the bottom of VIX is gonna lower as we head through spring and summer, you want a lower VIX to start from, like a baseline VIX, and right now it's 17 on 9-day. That's pretty fucking high. You got to think, like, does this get out of control or not? You can get like headline risk for a sharp move lower, but the U.S. Warships and destroyers were doing donuts yesterday. Anybody see that video? Like destroyers doing donuts in the Strait of Hormuz yesterday, and then Iran is running a information campaign past 2 days about the destruction the U.S. has caused in their country. And I know we're in a very low information time frame right now. There's other interplay here too. I should probably type this up and post it, but a week or two ago when or was it a week ago? When we got the word that Pakistan was entering the fray to help with negotiations. And on the show, I said to you, that's the country you want to hear. With the moment that Pakistan gets involved, it's not a short thing, but it's good progress. And the reason is, from my perspective and what I said to you on that show, was that Pakistan's a nuclear nation. They're a Muslim nation. I've also told you this in the past, that if there's a country you should be wary of, it's them. Not quite wary, but like a leader for the Middle East would be Pakistan. And I think I even told you the other day that I put them just behind China and higher than Russia, believe it or not. And it's not just their nuclear capabilities; they're an educated society. Their position in the Middle East, geographically, they're like, you figure like India's in like a rock and a hard place always. They call it the butter chicken republic. I shouldn't call it that, but India tends to put themselves in positions where they can't do anything, where they can't pick a side. Pakistan does something similar. They do something similar, but they don't get pigeonholed into not being able to take sides. They actually can take sides. So when you see Pakistan step in as the mediator, they have a strong relationship with both the U.S. and China. But if Pakistan picks you where India can't, that's a good sign. It shows that China is under pressure. And it also shows that Pakistan can lean on Iran for a solution. We also know that there's a lot of pain right now in China, in Southeast Asia, Philippines. There's pain in Japan, South Korea, a bunch of other Southeastern Asian countries, as well as Australia, with the strait being closed. There comes a point where that pain, I've told you in the show that the petrodollar is not real. You'll hear people still bring up the petrodollar. Petrodollar has been dead since the U.S. began fracking. So you want to say like late 90s. I want to say late 90s was the discussion about fracking. Then it got big in the early 2000s into 2010, 20. If any of you that live out west know about this, if you live in like Texas or if you live up in the plains, you've saw the big rush of fracking. And also in that fracking, we discovered more gas and oil in the U.S. And so the U.S. is not dependent upon world oil and gas supplies, and we're a wealthy nation. Our consumption is not through the roof. So China is now involved not on Pakistan's side, but they want a resolution as well. And with so much low information, you can see it. I think I went on a rant like a week ago. I went on a rant specifically about Reddit and how Reddit is like misinformation central. It's become like this astroturfed garbage information cycle, and they pollute objective thinking. And so there's like a narrative on Reddit in particular where they say like the U.S. is fucked, the U.S. is going to get destroyed, this is going to happen to the U.S., they're in a pigeonhole. And mostly this is from dislike of Trump. And Reddit can't disassociate itself from reality and anger. Like, I am emotionally angry and I can't separate that from facts or no information. So you get a lot of, I don't want to call it hyperbole, but you get a lot of like pissing without enough information. And like you guys know, we pay for information here. I pay somewhere, I pay tens of thousands of dollars a year for data and information, and to have information that is not readily available or comes in before everybody else knows about it. White papers.
Between Israeli and Lebanese ambassadors.
And we have a mentor who has a Bloomberg terminal. So you're talking about an advantage that most people don't have. So when I read that stuff, I'm freaked out. I'm like, well, I don't know if that's the case. I don't know why they're saying that. You hear it on Twitter too. You hear this shit on Twitter. It's not just Reddit. It's everywhere. But to that point, here are two articles. I think I can find them, but I don't know if I can find them right now. But Iran was running stories yesterday from their government pleading for assistance for the destruction in Iran. So when you hear things like, hey, we've destroyed everything, and there's mockery. People mock it and say that didn't happen, or we still have like a missile went off in Israel, so I guess they didn't take out everything in Iran. You really can't believe that disinformation. And Iran is making a case even yesterday into today about the damage done to its infrastructure and the knock-on effect down the road. This doesn't necessarily mean bad things are going to happen, that it's a high percentage outcome that we have bad things happen down the road, but it puts on economic pressure. The Strait of Hormuz closure is an illegal act. A blockade is a legal act of war to reopen the strait. So like when you hear like, hey, we're blockading, what they're doing is they're blockading Iran's economy, not the strait, but their ports and their ability to move things. And you have land, like geographically, you have countries that can move this stuff, like Pakistan can move rare earths, commodities across their land. It's not a land bridge, but it's like a small port with a land corridor. So when you hear like Pakistan get involved, when Iran or India's hands are tied, and you know that this is going to put pressure on countries in Southeast Asia and China in particular, you can already hear the drumbeat of, hey, we've overextended ourselves. You also have, I think, yesterday, 15 U.S. warships in the Gulf, and I think there's 4 more nearby or on their way. They should be there on the 19th or 20th. And it's not that things can't escalate, that they don't, like, I think I read somewhere, why are U.S. Aircraft carriers so close to the Strait of Hormuz? Yeah, I'll bang this from like the rooftops for the rest of my life. I don't think people can grasp the ability of projection of force as a expeditionary military in today's world. It's not easy. It's not easy. It's not easy for any country. China's building a navy. They have a lot of small boats, but an expeditionary navy that can be refueled, that can be rearmed, and then has the cadre with experience of being expeditionary is not there yet. It really isn't. And even China's access to seas and oceans is small. They're trying to expand their access to oceans, but it's still not there yet today. So when you're thinking about like what the reality is versus what we're consuming, like, oh, this is really bad, things are really bad, oh, Iran's going to do this and Iran's going to do that, the likelihood of the success of that is low. Or in not only that, but the likelihood of the escalation from that does not bode well for Iran. And I also think that people look at Ukraine and Russia as the example, and they're not really good examples. Ukraine is not the United States. It's not it's not NATO. Ukraine was under the thumb like right away when war began. And Russia is not the country that you think that it is. It's not the USSR anymore. So when you see how they fight, does it mean that that won't continue in the future? No, it will. You'll see more drone warfare, especially like tactical stuff close, like 20, 30 kilometers or clicks, depending on how you say that shit. But I was in the Army, but like 20, 30, even 50 clicks in a forward a forward area, you might have drones and like drone warfare, but the U.S. can project power thousands and thousands and thousands of miles. Ukraine resists from attacking Moscow in case Moscow hits them with EMPs or nukes or something like that, right? The U.S. is not afraid of that stuff. The U.S. is the hegemony, the world police. I've told you in the past, we will meet every threat, without fail. Even if we had a Cold War that took place in the mid 40s into the early to mid to late 90s, depending on how you look at it. I want to say the early 90s, like 92 maybe, it really started to fall apart. But you have to understand that, like, the buildup in that, if you're not older, the buildup in that that standoff was fucking epic. It was epic. In the U.S., in NATO, in the UN, and our partners, that buildup was insano. It was pure insanity. And to think like the U.S. would tuck its tail with Iran is bizarre to me. It's fucking pure insanity. It's illogical on every single level that you would expect that with Iran, and especially where we are in the world today. If you look at Ukraine and Russia, and you see, like, we're in the age of AI. Like, we're in a new economy. Whether you accept it or deny it, if you don't like it and you want to fight against it, you're like, hey, I want to vote against this or vote against that, that's fine. But you have to still acknowledge that we're in the age of AI. We are developing fast a new economy around the world. And every country is racing towards this inevitability. I know it's shocking. I know it's something that people don't want to accept. I know that there will be some kind of pain. I don't know how much pain. Or you at least have the whole world saying, no, we reject this. We don't want AI. We're not ready for it. Or we want controls over it. But you got to look at AI kind of like nuclear weapons. And they're not controlled by nation states. That is the crux. On the surface, they are. Well, maybe the government's got the better AI than I do or something. I'm one guy or something, but AI is out of the box. It's out of the box for everybody. And so the moment you can confront that and say, hey, this is really happening, you can start to see objectively what's really going on in the world. So if you look at Ukraine and Russia, like, you can't compare the U.S. and Ukraine. You cannot compare the U.S. and Russia and their abilities. And you have to confront that there's a world war going on. Like, we're in the middle of a world war. Like, you might not want it. You might want to protest against it, vote against it. You might want to scream at the top of your lungs out in public, I don't want to be a part of this. Whatever that may be, wherever you live, whatever country you live in, that's what you can do as a civilian. Or maybe you run for office, or you press your politicians wherever you live to rein AI in. But that's not the reality of what the world is right now. So when you look at Ukraine and Russia, what does it look like to you? When you hear stories of drone warfare, right? They've got nets up everywhere. They've got now land-based robots, right? They've got like drones in the sky, drones on the ground, right? Ground drones. And they're actively fighting using learned language models. They're using AI. They're near using swarm technology. And then when you see the U.S. confronting Iran, and you think, Trump's crazy, Trump's this, and he is. Like, let's be honest. Let's be honest in this show. He's fucking crazy. Not only is he crazy, he's very, like, vulgar, right? He's a very vulgar man for the president of the United States of America. He does things that are unpleasant, not popular, and he's a lame duck president, so he can do by executive authority, do whatever he wants and not care what the fallout is. And you hear me sometimes say things like, sometimes you get the good dad and the bad mom, right? Or good mom, bad dad, good guy, bad guy, good cop, bad cop routine from your leaders in this country. But when you look at, like, the objectiveness of this, right? Just the objectiveness. You can't defend Iran. You cannot. There is no defense for Iran. They are, and listen to this closely. because they are the seed of terrorism from the Middle East around the world. Now, I'm not defending Israel here at all, okay? Now, the second issue with Iran is that Iran, India, Pakistan, to lesser extent, some other countries like UAE, Oman, like the idea is that you have energy that's flowing through the strait into China, and not so much Russia, but China. And you have us at war through a proxy war in Ukraine, Russia. You have China wanting expansionist goals, as well as expanding their coastline, their sphere of influence, and you start at home with that. And so when you look at our partners, you look at Japan, you look at South Korea, you look at some of these other countries, even Vietnam and countries like Vietnam to some extent, that we want under our sphere of influence. Then you look at Australia, and you look at how this deadline is approaching on two fronts. You have a deadline approaching with AGI, right? We get closer and closer and closer to AGI, and you have China knows this, Russia knows this, everyone knows it. And you start to see other things happen. And you wonder, well, is Trump doing this because, he's crazy, or he's a buffoon, or he's this, or he's that? No. He is that person, but that's not why we're there. We're there to disrupt, right? Carry the big stick, right? The Monroe Doctrine. Carry the big stick, walk around and whip everybody into shape. And so I don't know how it works out. I don't know what the flashpoint is. I don't know if there ever is a flashpoint. I don't know if it just gets into like major Cold War. But the world wants to service this new economy. And you will see things like this continue. This will not be the end. You may see the end with Iran. And this is the craziest part too. Like, you're going to see like the price of oil stay higher because it'll be perpetually priced in the danger of that strait closing again in the future. Shocker, right? You'll never see oil come below that premium that's built into oil now in the strait. And as time passes, you're going to see more and more of this confrontation. The U.S. will not allow the flow of energy into these nations. When you go to war with these countries, it is not only kinetic. It's not like you go to war with a country like Iran or China or any of these other nations, Russia, and it's only, we're going to have two guys fighting on a front line here. And by the way, the war is going to be like Ukraine and Russia. That's not how it happens. You're going to see economic warfare. You're going to see kinetic warfare, or at least a confrontational kinetic warfare. You're going to see new agreements between countries. You see the U.S. is destroying, ripping up agreements that we had from when? Post-World War II, right? We also had agreements post-World War I. Those got ripped up too. Those didn't work, right? So we go back and we write new ones for World War II, and now we're renegotiating new alliances, right? New alliances for a new economy and the threat of likely new war. So when you see when you have low information from Iran, and then all of a sudden you get more information, they're pleading right now the past 2 days. Hey, our economy's fucked. 12 years of we're going to be fucked for 12 years. And you're also going to see like China in the background press for relief. A lot of stuff comes through that area to China. And when you're that big of a machine, you need to keep things running. I wrote a brief for you about this about a month ago, maybe a month and a half. And I talked about, as we come into this time period right now, that these countries over there are going to be feeling the pain economically. And they will press for relief. And so when you hear Iran pressing for relief now finally starting to leak out, and that's likely pushed somewhat also from who? From China. No country wants to go to the point of war. And not in today's day and age. We conduct warfare differently than we ever have in the past too, don't we? We do a hell of a lot of proxy wars now, right? Rather than direct confrontation. So, but we still, even before we get there, we start to push on each other, right? The warfare can take many different forms. So what is Iran in all of this? Another proxy war. You have a proxy war in Ukraine, in Russia. You have another proxy war between the U.S. and China going on. And you have now, 15 warships. I read last night people saying again, well, this is the best time for China to invade Taiwan. I'm like, you're out of your fucking minds. You have the full attention of the United States military like 2 doors down that are normally an ocean or 2 away. And you have them all in the same fucking place ready to go. Like, it's insanity to even hear this stuff. It's like, and what's even crazier is the size of the U.S. People can't grasp the projection of force, and not just kinetic, but economically. And not only that, the idea that the U.S. is not dependent upon the world for all of its resources. There are some that we are, but not all of them. I read recently something about potash, how the U.S. does not have an ability to create fertilizer. That is false. We sell a lot of our fertilizer and buy it cheaper from other places, but we have plenty, and Canada does too. And you might see Canada and the U.S. fight. You might see Canada say, yeah, we're going over here to get our goods from China right now. But as these things unfold and unravel over time, I even read last night someone saying, another post about how the U.S. This was a post, or this was an article from. I read it last night, but it was like 12 hours old, and the article was all focused on like a forever war in Iran. The 3-day special operation in Russia and Ukraine is like U.S. and Iran, and it is not. It is not the fucking same. It has not been 3 years. And the other idea in this is, what are the goals of these wars or proxy wars that these countries take on, right? And oftentimes the U.S. is not there to actually nation build, even if they tell you at home that they are not. They want presence. They want to be there, that kind of stuff. Or they just want to mow the grass. But we're not in that situation anymore. We're in this different situation. We're in World War III, whether you know it or not. And you're going to see crazier things happen as we get further and deeper into this new economy. It'll be similar to every other economy that the world has had. And normally those become confrontations that either go to war or a standoff, some kind of Cold War, and people pick sides. And what do? They conduct warfare against each other in one way or another, either economically or kinetically, until one government or the other fails to serve that new economy.
As the US Treasury has sent letters to China, Hong Kong, the UAE, and Oman, identifying banks that have allowed Iranian illicit activity. So earlier from Fox,
the winning governments that win that,
these banks about handling Iranian money.
The winning governments and forms of governments that service those economies, they're also what else? They're the winners of that wealth, right? You have new economic wealth with a new economy. And the goal is what? Greed, power, money. That's what it is.
Al Jazeera Broadcasting Authority citing a source said that Israel is in contact with Washington and European countries to ensure that the Houthis do not intend to disrupt navigation.
When you are like, how do I forget who said this years ago, but someone said you can tell who pisses in a pot and who doesn't. Who has the resources, who doesn't. If you go to a country and they piss in a toilet bowl, you know that they're under the dollar. And so all of these countries want that opportunity, right? China wants to pee in a toilet bowl. Maybe they don't, but figuratively, they want the toilet bowl. And they want their partners to have the toilet bowl. And the U.S. wants to have the toilet bowl. And Europe wants to have the toilet bowl. The whole world does. So to think we're in this, like, or to think that...
Broadcasting Authority, who's quoting officials, say that Russia have agreed to receive Iran's stockpile of enriched uranium. I believe this is a confirmation of a story from last week.
To think in this low information environments, you can tell, right? You guys can't tell that we're in this, like, it's not just the robots, the drones, the ground and air drones. You can tell that even policy is being decided. Even if there's human oversight, you can even see in how this is being conducted from both sides. You can see, even with Iran and the U.S., that AI is being used. You can see it in the memes and the videos that are posted, the slights that are made. You can see it in the consumption of media, not just social media, media. If you go to like the WAPO and the CNN and the Fox News all around, and especially if you're not don't like specific media, you're like, I don't watch Fox News, or I don't watch this or that, or listen to this or that. I spent 2 weeks ago on a weekend, I was doing yard work, and I was driving, and I don't listen to the regular radio, ever. I listen to like the smaller channels in the bottom end sometimes, but I'm not a radio guy. Regardless, I just don't listen to the radio. And I turned on, I think it was Claire Channel, but I could be wrong. It was like a talk radio that was national. And I was amazed. And I don't agree with anything on this radio channel, nothing that they say, but I was amazed at the information that was being dispensed on this channel. This channel was pure propaganda. It was meant for to be directly pumped into an audience that agreed with this channel. And whether I agree with that information or not doesn't really matter. What matters was the observation of, hey, all of this media, no matter what your taste is geared towards you're consuming it and liking it. Ooh, it's a pizza. I'm going to eat the pizza. Oh, it's a steak and cheese sub. I love it. Oh, yeah. What do we got over there? We got what do I got? Oysters over there. I got some sushi over there. Give me some of that. And the information today is so much lower and should get even lower and lower that we're consuming what is available or what is made up or what is not discussed or was wanted to be discussed in public. And then we're forming opinions and ideas that are not based in reality. I don't think I've ever seen it like this. Maybe it was like this in the 50s and 60s, possible. Or you were at least aware that it's propaganda. Grinding higher right now. Maybe people are like, I think when I was young, I kind of remember like, that's kind of cute. That's propaganda, though. I get it. But it's not as clear cut today. There's a lot more like that this is real and true, and it's not. It's not from the government or from another government or another entity or corporation, even people. And groups can do this today. It's fucking wild. But the idea for where we are, the reason I'm talking about this to you right now is because you could likely see some kind of an announcement sooner than you think. Even today into the bell, that's possible. Maybe even an all-time high. And the reason I'm saying that is because of the VIX expiration tomorrow. And VIX right now is sitting at 17, or at the VIX 9 days at 17.04. So if you're expecting and front running some kind of a resolution where the strait reopens, and who do you think's going to run it? you guys know what the reality is, right? China is not stronger than the United States. That's the truth. They're not equipped to be an expeditionary force. They're not going into the straits with Chinese warships and start sinking U.S. ships. It's not going to happen. And the U.S. is going to project its force. And I know that makes people punch air, scream. We shouldn't do this. I don't want to fight China. I don't want to attack Iran in this way. I'd rather dismantle Iran through peaceful means. Me too. I don't want to do any of this stuff like this. But the reality of what's happening is it's right in front of our faces. You can see this in Ukraine and Russia. You can see it in the confrontation with Iran. You can see it. You have Anthropic telling you how close. I think we've actually made it. It's just a matter of energy and data center build out. We've already got it. It's just a matter of building it out now. When you hear those things, that perks heads. And so you're seeing the escalation on the back end as you see the build out of energy and the build out of data centers. Oh, only half of them are being done this year. So what do you got, another year? 1 year? 2 years? What do you got? And so as we move towards this, I don't know if we're moving into a singularity, or maybe some of you would argue we're already stuck in the singularity. But you have to think that, like, as we move forward in this, you're going to see other things alongside it. You're going to see an accoutrement. You're going to see a side dish of this and a side dish of that, hand in hand with this eventuality, right? And all along the way, we're kicking and screaming, I don't want this, I don't want that, and I definitely don't want to do this, and I don't like that guy over there, the president. I don't like him. Tell you full on, I don't like how we're doing this either. But I have to be honest as to what's happening. I have to be objective in who's doing what and the ability of those doing it. And what the expected outcomes are. You have to expect that the outcome is that the U.S., at this point, until someone, for like a Mexican standoff or something, everybody's holding a gun, can that happen? Sure. Is it going to happen today? Probably not. Can it happen as we do more and more of this? Yes. But we will meet that every step of the way. And I think that's the thing that people don't want to confront, which is you're not going to stop it. And you're not going to stop the U.S. Confronting this one way or another, whether that even results in a fighting war around the world. The U.S. will confront that event, that ultimate economy that's coming, and anyone that is going to contest who will service that economy, even if we lose. But I wouldn't be betting against the big guy in the room. If you look at a room full of these players, participants, it's kind of like walking into, let's say it's you walk into a ring and there's 10 women there, and they're all going to fight each other. And there's like one woman that's been trained. She's got all the stuff. She's got a water bottle and a trainer in the corner and a coach. She worked out more. She's bigger. She's stronger. And everybody else is like, oh, I'm Susie. I'm a teacher. I've never had any training in my life. I don't work out. I eat bonbons all day long. I've never even been in a ring. And then you got Mary. She's got the trainer, the coach. She's got the nice uniform. She's ripped. She spars every day. She's been fighting and training and practicing every day. Been in a bunch of real fights, and there's like 10 of them with different experiences and abilities. And somehow, because of our anger, we want to discount Mary that's been doing it all day long. when you should, in fact, be putting your bet on Mary. Mary is likely going to clean up in that ring. She's likely going to go in there and she's going to wipe the floor with all of them. So, like, your hopes and dreams in reality are oftentimes different. So we may not get that announcement today, but we're set up for it is the point that I'm making for you, or at least pricing that eventuality in. So if you see a squeeze in the end of the day, if you see VIX get murdered into the bell, you see the market melt up or even squeeze up into the close, don't be, shocked Pikachu here. On that potential for the war to come to an end, and the Strait indubitably to allow more and more flow of oil. And yes, the United States and its partners, even if you disagree, which I do, but the U.S. and its partners to facilitate that to take place. It's. I mean, I get the emotional stuff. I get it, but the reality is that the U.S. is not going to back down from that. So if you might see that today, you may not. You may see it tomorrow, but you might see the pricing in of that announcement today, tomorrow, whatever. We do also have tomorrow Vixpiration that could bring some, you might hear bad news in the bell, or we don't know why we're going down in the bell and stuff like that. So if we get this big squeeze up into the close, we could roll tomorrow. But we are closing doors to the downside, too, at the same time. 70s were open. Now they're closed. Now we have 80s and 90s for tomorrow. Can we trade the 70s? Sure. We can trade all the way down to the daily trigger. No problemo. But the higher we go, the less backwards we tend to go. So maybe we hear some good news into the close. Then you hear some bad news tomorrow, or they manufacture something for the tape. Manufacture something for the tape to read. But all in all, in general, if you read what's happening out there right now, the information that is starting to leak, we look closer to some kind of a resolution in the Strait of Hormuz, and more than likely our partners. And right now we've got Pakistan, we've got Saudi Arabia, we've got Israel, we've got Australia, and to some extent even our partners in the West, even if they don't say it publicly because it pisses off their constituency. You still have tacit support from the West, including the EU, including North America, and our partners, of course, in the East. So you start to see who's who and what's what. You really, truly do start to see who runs the world currently. And currently the West does. And our partners in the East. That's who runs the world currently. And although we don't need that one anymore. Although we don't, although I want kumbaya, I mean, I'll tell you personally, I don't like that AI is out there. I think AI should be controlled like nuclear arms. And I think it should be looked after from the world community. But will I ever see that? Do I let that play into my decision-making, or how you trade the market, or this can't happen, or, oh, my God, the market has to crash? Even the news that's coming out now that there'll be a knock-on effect in the second half of the year that the world economies will have to deal with. If you look closely at the late 1990s, sure, you want to see the market go down in the fall? 10, 15%, 20 or 30. Does that mean that the bubble pops? No. Does that mean that we don't continue the build out of data centers and energy? No, it doesn't. These countries will continue to build these things out. In fact, China at this point likely needs to move into some kind of a cycle similar to COVID, where they're printing money. They will attempt to survive this through a money printer. And so wouldn't the United States. The U.S. will build out AI data centers. Let me say that to you again. They will build out AI data centers. They will build out the energy for it. They will build out AGI. And they will continue this fight until they can service this new economy. And nothing will stop this, even if they have to print their way into it. And nothing will stop China from doing this, even in the future. In the second half of this year, this is like it's like a runaway train you can't stop, even if you had the will to stop it. And there are cases and points of this. When you look back on history, think about when you're young and you learn history and you say, wow.
That sharp disagreements among members of Iran's negotiating team led them to abandon U.S. talks in Islamabad and return to Tehran on April the 11th, following an order from Iran's top security official. This is again coming from Iran International, citing sources familiar with the deliberations.
You know, I wouldn't have fought in World War II. I wouldn't have stormed the beaches of Normandy. You couldn't pay me to do that. Or I can't believe how many people were killed in Russia during World War II. Why didn't they flee before the Germans invaded Stalingrad? And what happens is humans tend to stick their heads in the sand rather than confront reality. Maybe they are too poor to step out of the way of the eventuality of these things. But in fact, the world continues to march forward. Can you imagine someone in Germany at the start of World War II saying, oh, that's not going to happen. This isn't going to happen. There's no way this is going to happen. This guy's crazy over there. The world will stop him. And that's not what happened, is it? The world stopped him eventually. But that person that was pointing at that time period, we had no internet then, but that person that was like, hey, I don't agree with this. And hey, this isn't going to happen. And they're crazy. And this is insanity. They got swept up in it. One way or another, they got swept up in that. And they probably exited that war either dead, maimed, ruined in their mind for the rest of their lives, left with scar tissue in their mind, whatever it may be, losing family members. And they stood there as the train came by and literally ran them straight over, while they pointed fingers and said, this can't happen, that guy's bad, and this is that, and this is that, and this is that. So you as a market participant need to be aware of objective reality, and as things unfold and new information that you receive versus hopes and dreams and wants and anger and mad, I don't like this and I don't like that. You know, internet fist pumping. Well, we got bad things coming in the second half of the year. Yeah, but they'll deal with it. They don't want to say that, though, do they? And you're not consuming that, are you? You're consuming the 3% chance this might happen, or 5% chance that might happen. World War III might break out. 50% of the world won't be able to eat because of the fertilizer blockade in fertilizer. It's not what's going to happen. That's not what's going to happen. There'll be enough food. There will. People will eat. The countries that will pay the most are what? Third world countries. Is that bad? Yeah. Do I want to see a third world country experience that pain? No. But that's what happens when you go to war. That is what happens. So I do expect some kind of resolution. The market is pricing in some kind of a resolution. We are heading into Vixpiration tomorrow. Be careful that we do not be careful that we price in the concept of some kind of a halt to military style action. You might still get terrorism, but military action from Iran more than likely ceases sooner than you think. And more than likely, China steps in via Pakistan. And this is not yet the fight that we're building up towards. And there are other places too. You heard Trump recently speak about Cuba. Cuba's another one. Why is that? They were another important country during the Cold War, right? We're getting all of our ducks in order around the world. And you should expect this to continue. You should expect, like, not Iran, but you should expect more of this kind of stuff as we move forward, hand in hand with the build out. So if you look back in the late 1990s, you'll see we had huge drawdowns, massive, like a month, 3 weeks, a month and a half, down 15, 30%. Then a month and a half of 3 months of vertical, down 15%, up 30, down 30, up 50. And you should see more frequency in that as we continue down this,
longer lasting.
Path of new economy, path of new governments, and you should see flashpoints like this continue hand in hand until the build out is done, and until one or more declare that they're the master of AGI in their economy. So you have China with their AGI, the US with their AGI, Europe with their AGI, and then from there, what do? You start being the biggest kid in the corner, right? Yeah, I got my AGI, you got your AGI. Let's plot them against each other. But what are they going to use? Well, we're testing it all right now in Ukraine and Russia, right? We're like sitting there right now with a real-time test of this stuff right in front of our faces.
Senate Banking Committee hearing is set for April 21st for 10 a.m. Eastern Time. ECB's to length. The ECB will know more on Iran impact by April, June. So again, the ECB will know more on Iran impact in oil in June.
We have two more targets above. Just note that we're parked above 69385 right now. This is kind of like a major level right here. Right where we are, we're looking to take out into the bell if we can. 695.29 and 697.29. If you did not hedge yesterday's bell and have not hedged yet today, I do recommend that before the close or at the latest, if you want to wait until the last minute, that you hedge on the open tomorrow for Vixpiration.
Microsoft to buy 3,200 acres in Wyoming for data center. So they're to expand data center operations in Cheyenne, Wyoming.
I'll bring this over so we can see it. If you're looking for a flush,
Adobe extending declines now to 2.5% on Anthropic design tool report.
half hour trigger racing up right now to 689, 690. $695.29. I got that one up there. Do I have 697.29? There's another one right here. R3 is 699. Can we see this here for a flush? right there. I don't think we're going to get it. I think we're going to hold. We have a, let me show you something here, guys. We got our new 4-hour candle, and we're sitting right on it right now. We're right on top of this 4-hour candle. So we just want to see if this holds, and if it does not hold, if we flush. Can sweep like the top 20 here. Sweep this right here. I'd like to see this hold here. No new second low. One low, two low. Hold on 1 second here, guys. Hey, I'll do it. I'll do it. I got it. It's a nice little red bar right there. Let's watch this closely here. VIX 9-day, a little spike again, but it's about to get rejected above at 1816. And then you're just going to droop in here for a minute. Keep an eye on 69362. No, hold on. I got that wrong. Excuse me. It's 69360. If we get a new low under that, we would be targeting 692.24. Or 692.82 and then 692.24. But this is the basis here. 692.50. If we can even get down there. I don't think we can, but I think the best we're going to do is just do this right here, and then get sucked right back up again. Yep, sorry about that. Starting to lose 693.60. Half hour trigger racing up now. The half hour trigger is now at 688.99, making its way up to 689.50 at R1. Should be right at the bell. It should be right around 690, the half hour trigger. First touch of the 5-minute trigger since 9:30 this morning. Remember that the target for today is 690 or 6950 on SPX. That's the magnet for the day on 0 dates. I'll check it again here to see if it's changed. $6950 on SPX is the magnet. I'm going to check right now, make sure it hasn't changed. 6950 is still a magnet, but we do have new ones. 6960, to a lesser extent, to 6965, 6970. $6980. If we're going to do that, we're not doing it till the bell. It's a nice send down there. Look at that, got bought like nobody's business. Hey, buddy. Oh, yeah, baby. Smash it. You want to watch this right here? Want to see if we erase any of this?
Even though the markets S&P 500 just seeing a bit of a decline here. No news headlines that have come through as of yet. We'll relay any information to you as soon as we can if we do find something.
You want to be seeing if we trade 23 down here. Right here. We haven't traded it yet. Just waiting for one more stroke here. One more stroke right here, then a pull up, and then down. I want to see one more tick right here. We'll see one more red bar right here. That was a good tick right there. I'm just waiting for a rejection right here. Come down this way. This white line, this yellow line right here is the line you don't want to see price go above. That might be bottom right there. You could argue that it could trade 691, but we want to see if we reject up here. 693.57. That's 42. Yeah, right here. We just need to hold this in. We need to reject this right here. Don't sell this unless there's a rejection up here. This could be bottom, even with the violation down here.
according to US-Lebanese-Israeli statement, productive discussions on steps to launch direct negotiations. Also, according to NBC News, citing the meeting between Lebanon and Israel, that the parties at Tuesday's discussions agreed that Hezbollah should be fully disarmed and that Iran should no longer be allowed to dictate Lebanon's future.
Yeah, this looks like a reorganization of the Middle East, doesn't it? They're really trying to stop this right here. I don't think they can, but I think it's definitely trading this right here. At least this 693.41, at least up here to 6. I'd say 693.57.
NYMEX WTI crude May futures settle at $91.28 a barrel, down $7.80 or
At least right there.
87%.
Let's watch this closely here.
May futures settle at around $3.62 a gallon.
It's literally pennies. It's like pennies here.
$3.03 a gallon. And NYMEX natural gas May futures settle at around $2.59.
We need to stop like right here. Or right here we need to stop to go down.
Senator Thune says reconciliation bill will probably be in the $65 to $75 billion range. And adds that most of us feel good about the US's achievements in Iran.
We want to watch this here. Or a new low, we can take the next leg. Watch this here in particular. Can squeeze all the way up to right about here and still be good for this leg. Just a quick old flush. Give me 1 second here. Be right back. Keep your eyes on these two targets right here. If you see price break up and hit this second target, this is the dip buy right here. If the market fails to get that new high, we'll make the new low and make our way to the downside.
On Fox News, Moonlar asks Hegseth to press Airbus on satellite images.
Remember what I drew for you up here? You just want to see if we fail to get above that line or not. If we get above it, we're going to buy the back test into the bell.
So again, US Treasury warns financial institutions about Iran ties. Also from the Treasury, they say the short-term authorization permitting the sale of Iranian oil already stranded at the sea is set to expire in a few days and will not be renewed. Brent crude futures settle at $94.79 a barrel, down $4.57 or 4.6%. IEA Director General to The Economist says Iran was not weeks or months away from possessing a nuclear bomb. The Lebanese ambassador to the US says that the date and location of the next meeting with Israel will be announced later. It's getting from the US's side now. State Department issuing statement after the US-Israel-Lebanon trilateral meeting. They discussed steps to start direct negotiations between Israel and Lebanon, and the US expressed support for further talks. So also they expressed hope talks would go beyond scope of 2024 agreement, and they hope that the talks will lead to a peace agreement. Also, U.S. State Department says Israel affirmed commitment to working Lebanon to disarm non-state terror groups and their infrastructure.
Same lines apply. Nothing's changed with these two lines here.
Wall Street Journal reports that Europe drafts a post-war plan to free up the Strait of Hormuz without the US. Several dozen countries are to discuss how to police Hormuz after the war ends.
We have posted out the link to the feed for you to read through. Again, Europe drafts post-war plan to free up Hormuz without the US. So a reminder that includes the UK and France. Also from the Wall Street Journal, the defense plan likely to include Germany. So again, defense plan is likely to include Germany. Further from the article from the Wall Street Journal, European nations plan to help free up shipping through the Strait of Hormuz, includes sending mine clearing and other military vessels.
target hit up here, by the way. This yellow line right here took that one out and took this one out, implies an upward move to the close.
Commerzbank CEO says outlook for German economy weakened. That's Commerzbank CEO all up.
Have some news saying that Pakistan is pushing for Iran-U.S. talks this week, per the New York Times. I mean, it's like you can't miss it that they want to announce this before the close today. I don't know if I'd call them turncoats. I would say that you need like new. You have to remember that, like, hold on here. You have to remember that treaties are born of, situations. You make a treaty with a country, different kinds of treaties too, right? You have economic treaties. I think Pakistan and China has an economic treaty. I forget the name of it right now. They've got one or two, and then they've got belts and roads going on over there too. There's huge belts and roads, I think, in Pakistan. But you figure, like, it's not really like I wouldn't really say like they're turncoats or they're you hear that, you know what I mean? Like, you heard it this past 2 weeks, right? Like, you can hear anger and rage about what the U.S. is doing in social media. You can hear it, right? Oh, U.S. is gonna fail. Oh, this is gonna happen. Oh, watch out for that. That kind of shit. That likely stems from people that like the status quo or don't like the way we're doing something, or they have to portray something. There's a whole bunch of different angles to it, but like even our partners, like, let's say you look at like Canada or the European Union, we're pushing them to spend more in defense. So and you have people angry. No one wants, like, everyone likes the status quo. So let's say I don't know, the U.S. and I go to a meeting with the UK and I say I want to do this and we need to do this and that, and this really bad shit could happen, and the UK says, you know what, I like the status quo and I don't think it's as bad as you think it is. Meanwhile, I don't trust you because you're Trump, right? But the status quo is always the way, because they have to always go back to their people and say, we're going to do this, we're going to do that, we have to do this. And the people don't want to hear that. They don't want to hear we got to change defense spending to 4% or 5% of GDP. People get pissed off. So, like, bad dad comes in and then they're like, oh, look at dad over there wants to allocate the money, not me. But further into that, like the treaties and like League of Nations is a prime example, right? Like League of Nations punished, like, top line, punished Germany in Reconstruction in World War I, and basically said, you were the bad guy, and what we're gonna do is we're gonna lay on top of you the cost of World War I. And so what was does anybody know what was going on in World War I at that time? They were in like a monarchy type based system. They were living on the shoulders of I'll try to be nice here, but basically austerity and pain and economic pain, industrial pain, and oh, by the way, we're gonna burden you with all this other debt, and there's no way to climb out from it, right? There's no way out from it. So there was no reconstruction for Germany. There was no. It was more like, we're gonna saddle you with even more. It's kind of like my dad when I was a kid. I'm thinking about it, and I'm like, it's like my father. When I was a kid, it didn't matter how good I was. I was never good enough, and so I would never be good enough. And so they did that to Germany, right? In World War I. We had the League of Nations, which didn't have enough power, and then you're setting up also countries for failure. World War II, we changed when we ended that war, we changed our treaties, right, with other nations, and we were like, do we want to be back here again? Have we bled enough? And so what you saw was more aggressive reconstruction. And of course, the U.S. paid for a lot of that, right? And you had to pay that back. And we formed new treaties post World War II that gave a chance to these countries to not fall back into what they were in before, right? And I think, like, when you have a treaty, it's like, I think at my age, I don't like being a child. I didn't think that NATO would dissolve or the UN might dissolve or we might be fighting with Canada or Europe or any other nation, for that matter. No nation. When I was a kid, I was a kid of like Cold War, and then I lived probably through the best, and my thoughts are the best time of life in modern history. I mean, I grew up in the 90s with my whole entire class was, we were talking about, no more war, no more global warming, rights for everybody, you name it. We were like, world's going to be the best place ever. It was one of the best times you could be alive, truly. Like, you came away from like punk rock, Cold War, rebelling against perceived fascist authoritarian regimes, even in our own country. We went through this sweetheart phase, and at that time period, I never thought, I always thought like this would hold and this would all be the same, and I'm gonna grow old, have some kids, and everything's gonna be great. But this new economy, it doesn't call it into question. It just calls it's like, I think some of these countries too, a lot of these bills from World War II have been recently paid off. So it's like ironic, right? But you got to think about, it's not necessarily like, I don't know, like my partner is Canada or not. It's more like, there's this new economy, right? And who are going to be my partners? Not necessarily like, I don't like England or I don't like Australia or any other fucking country for that matter. And it doesn't matter what the country is. What matters is, do those old treaties that were geared towards World War II fit this new economy? And they don't. So you have to find out who your new partners are. In every new economy, we've had differing or slightly different or alterations to who our partners are in those economies. And I think it's not just us. It's like every country through history has been like this. And so I think a lot of that applies here. What's fucked up is I never thought I would go through that in my life. And, it's like a gut punch. Like, this is really happening. And I've always known these as the U.S. partners, and they probably will still be U.S. partners. So you're either like whipping them into shape or you're renegotiating new treaties, and everyone's going to kick and scream in that. It's not a U.S. specific thing. If, let's say, Norway was the world policeman, they would do the same fucking thing. Even if it was nicely, they would still do it. And there's no saying that we're going to be the leader of the world in this new economy. We could lose. I think the bigger thing here is that it's happening and we have to be aware of it and accept that it's going on and try to see who the players are, what their strengths and weaknesses are, who's the heir apparent to that, even if they lose, and that we probably need new treaties. As a matter of fact, just look at Ukraine. Like, they're writing new doctrine. They're inventing new military doctrine. They're developing drones in a way that the U.S. hasn't done yet. We've had some of it. Japan just did a deal with Ukraine recently, but that like frontline doctrine, frontline development. Who's the largest military on the European continent right now? Battle tested, armed, fighting against Russia and China. Who is it? It's Ukraine. I would not, if you'd asked me like 5 years ago, yeah, Ukraine's going to be your biggest partner. Never would have thought that. I mean, I was always aware that Ukraine provided the fighting class to Russia when it was the USSR. But I never thought like Ukraine. Yeah, that's going to be the, like, that's going to be the, the tip of the spear for Europe. Never thought that. So do you make treaties with Ukraine at some point? Do they become a large partner for you? If they stay in the fold of the West, like your biggest partner at one point in World War II was England. Does that remain or not? Or do you get like Ukraine and England still? Is it like, hey, of course I always love England. I was taught when I was in the military, that those are pretty much our biggest ally. Like when the cards are down, England should always be there for us. France, Canada, Mexico, to some extent Australia as a secondary, but those relationships change, and I still think they'll be our partners, but I just don't know who they are in the future. So when you see like the new treaties and stuff, or like this guy's our friend, or the U.S. is no longer our friend, I would think that commentary is more than likely less, we're not friends, and more, I don't want to do this, and I don't want to be told to do this, and I don't want you to say it in public, and the status quo, and my people, and my constituency, all these different things. And I think you see like mixed messaging too, and this kind of stuff. Orban is a prime example. You see mixed messaging. You'll see people cheering, right? Orban's gone, everybody's happy. But then at the same time, you'll see people parrot Russian talking points. So there's like mixed signaling, mixed messaging. And I don't like this guy, so I don't like this stuff. And that's one of the problems with Trump. Like if there's a problem with Trump for Democrats, it's more than likely that he's a populist. He does things. It's not like cut and dry, like he's a Republican. It's more like he does things that both sides can oftentimes be like, I get behind that. I hate that. I get behind this, or I don't like how this is done, but I know that I like that. And so there's a lot of anger and animosity for other reasons, which we all know, as to why the messenger, maybe. I don't like the messenger, so I don't like any of it. But it's there, right? You can't say that you want Iran controlling the Strait of Hormuz. It's impossible that you want that. And especially if we fight China. If you think about it, if we're going to war with China, you make that assumption. We're going to war with China. There's a timeline. There's a clock that's ticking, and we need to be positioned for it. And it's going to be painful. Even if it's just a Cold War, it's going to be painful getting there. It was painful in our last Cold War, right? We had major wars in Korea. We had major wars in Vietnam. We had major wars in all over Africa. We had major wars in South America, Central America. It was wild. It was a wild-ass time. I was a kid then. We had fighting all over the world when I was a kid. When I was a child, there was U.S. involvement, direct or indirectly, all over the fucking world. We had a wall in Berlin. We had Eastern Bloc countries in Europe. It was insane-o what was going on back then. It's like when you hear a young person without that wisdom or like having lived through that stuff say, well, I don't want to do this, and we're not going to do that, and the U.S. is going to fail, and this is going to happen, and that's going to happen. And I'm like, I don't know. I'm like, I was a child of that, and that's not how that shit went. Like, like the U.S. just kept doing that stupid shit. And you're, punching air on that stuff. So I think I think new treaties are required. They're required, and then also, just like in politics, you have a whip, right? You've got a house whip, and the whip rounds people up and says, "I need you to come with me," and they go, "I ain't doing that." And you're like, no, you're going to do this for me, and I'll do this for you later. And it's a series of negotiations and that result in treaties. In this case, not Congress. They're going to rip your faces off in this bell, by the way. They're going to bleed this VIX out. We got to watch the VIX into the close here. And even if you're watching this show, let's say you're from Europe and you're listening to me and you're like, fuck you. Like, I get it. I understand. I completely understand. I would probably be saying the same thing. Fuck the U.S. I don't want to do this, and I definitely don't want to do what they're telling me to do. And I would more than likely be saying the same thing, but at least acknowledging that these things are happening like this. And it's hard to acknowledge it because the other brutal part here is there's so much obfuscation that people get detracted from what's really happening. They get detracted with Epstein files. I know Epstein files are bad. I think, I'll tell you right now, Trump was definitely doing that shit. Come on. Guy was in that fucking shit 40,000 times. But do people care? No. Is he the president? Yes. Has he been impeached? No. So when you have that information and then people are harping on it, it obfuscates what's really going on behind the scenes. Like if you like look at everything, it's like, man, this shit happens whether they want it to or not. You know, like it's like you're being dragged kicking and screaming. Would I prefer someone else to do it? Of course. You know what I mean? So it's just a crazy fucking train. I just hope it doesn't get as bad as it has in past cycles, in past new economies. Some of those wars have been fucking nasty. That's my hope, my one fear. If I had one fear, is that it grows and grows and grows and grows, or it leads to the destruction of humanity. Which, you know, as we all know, like Sam and all those other guys, they're fine with it. You know, like yeah, fuck it. That's the inevitable outcome. I hope it doesn't turn into that stuff, but